ExamPrep.School. Colorado Title. Insurance Exam, Exam Code INSCO-Title 83. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Consumer protections, definitions, legal descriptions, methods of transfer and conveyances, prohibited practices, rates, real estate ownership, rights and interests, standards of conduct, licensing, title insurance policies, title insurance terms and concepts. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. In title insurance practice, which selection most accurately contrasts the function of a title commitment with that of a title insurance policy? A. Lists potential liens and encumbrances without committing the insurer to issue coverage. The policy finalizes protection details. B. Obligates the insurer to issue a policy under defined conditions and exceptions prior to closing, whereas the policy indemnifies against covered title defects post-closing. C. Details escrow and closing requirements for the parties, while the policy specifies premium obligations and indemnity coverage periods. D. Functions as a preliminary abstract of recorded documents, whereas the policy guarantees the title free of defects subject to covered risks. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. The correct answer is characterized by the commitment's conditional obligation to issue coverage before closing, and the policy's role in providing indemnification after closing. Reason A is not correct. Incorrect because the commitment does more than list encumbrances. It binds the insurer under specified terms. Reason C is not correct. Incorrect because escrow and premium details are administrative, not the insurer's issuance obligation versus indemnification. Reason D is not correct. Incorrect because a commitment is more than an abstract. It creates contractual conditions for policy issuance. Question 2. Which element listed in Schedule A of a title commitment specifies the proposed insured and their insurance interest in the property? A. The precise legal description detailing lot dimensions and boundaries. B. A comprehensive list of exceptions and exclusions to coverage. C. A depiction of recorded easements and outstanding liens against the property. D. The name of the proposed insured and the estate in the land to be insured. The correct answer is D. The correct answer identifies Schedule A's designation of the proposed insured's name and the estate to be insured, distinguishing it from schedules that list exceptions or record data. Reason A is not correct. Incorrect, because although Schedule A contains legal descriptions, it does not identify the insured or their estate. Reason B is not correct. Incorrect because exceptions and exclusions are detailed in Schedule B, not Schedule A. Reason C is not correct. Incorrect because easements and liens are exceptions listed elsewhere, not in Schedule A's identification section. Question 3. A title commitment's schedule. BI shows a requirement to clear a mortgage recorded in favor of ABC Bank. Which action would best satisfy this requirement? A. Obtain a written estoppel certificate from ABC Bank confirming the loan balance. B. Provide a loan payoff statement from ABC Bank without recording. C. Record the original mortgage satisfaction or release document. D. Secure an indemnity agreement from the title insurer covering the mortgage. The correct answer is C. The correct answer is to record the original mortgage satisfaction or release document, because only a recorded release removes the lien from public record and fulfills the Schedule BI requirement. Other options do not clear the lien from title. Reason A is not correct. An estoppel certificate confirms the loan balance but does not remove the lien from the public record. Reason B is not correct. A payoff statement shows the amount owed but does not eliminate the encumbrance on title without recording a release. Reason D is not correct. An indemnity agreement provides financial protection but does not clear the lien from the public record. Question 4. A title commitments schedule. B2 lists a subdivision's covenants and a recorded water pipeline easement, but also includes a deed of trust in favor of XYZ Mortgage Company. Which of these entries is incorrectly listed under Schedule B2 instead of Schedule BI? A. The subdivision's covenants and restrictions. B. The recorded water pipeline easement. C. The deed of trust in favor of XYZ Mortgage Company. D. All entries are appropriately categorized. The correct answer is C. The correct answer is that the deed of trust should appear on Schedule BI as a lien requiring clearance, whereas covenants and easements are properly listed as Schedule B2 exceptions. Reason A is not correct. Covenants and restrictions are standard Schedule B2 exceptions and are correctly placed. Reason B is not correct. Recorded utility easements are common Schedule B2 exceptions and are correctly listed. Reason D is not correct. Not every entry is correctly categorized. The deed of trust belongs on Schedule BI. Question 5. Which of the following best describes the primary function of a title insurance endorsement? A. Clarifies specific definitions and terms within the title insurance policy without changing coverage. B. Modifies coverage scope under an existing policy by attaching additional provisions without reissuing the policy. C. Serves as standalone proof of title ownership for parties not listed as insured under the policy. D. Establishes the premium rate and fee structure for specified title risks assumed under the policy. The correct answer is B. The correct answer is that an endorsement modifies or expands the scope of coverage under the existing policy without issuing a new policy by attaching specialized provisions. Reason A is not correct. Clarifying definitions does not alter coverage terms, whereas an endorsement changes coverage scope. Reason C is not correct. Endorsements are not separate proof of title ownership, but are modifications to the existing policy. Reason D is not correct. Premium rates are set by the insurer's rate filing and not established by policy endorsements. Question 6. Under which condition is a lender most likely to require an ALT A8.1 environmental protection endorsement? A. Transaction involves unimproved residential land in a rural area with no history of industrial or commercial activity. B. Property has current or historical industrial use or known environmental contamination risk. C. Loan is unsecured and relies solely on borrower creditworthiness without collateral. D. Title search discloses unpaid special assessment liens related to public improvements. The correct answer is B. The correct answer is that a lender will require an ALTA 8.1 endorsement when the property's current or past industrial use creates a potential for environmental contamination that the lender wants covered. Reason A is not correct. Unimproved rural residential land rarely presents environmental contamination risks addressed by this endorsement. Reason C is not correct. Unsecured loans based on creditworthiness do not trigger environmental risk endorsements tied to property collateral. Reason D is not correct. Special assessment lines concern tax obligations, not environmental contamination risks covered by ALTA 8.1. Question 7. A title company is asked to issue an access endorsement for a residential lot that obtains vehicular access via a private lane rather than a public road. No public utility easement is recorded for the lane. Which of the following constitutes the minimum acceptable evidence for issuing the endorsement? A. A recorded easement document granting the lot owner right of ingress and, for example, over the private lane. B. An affidavit from adjacent property owners stating that the lane is open for public use. C. A current ALTANS PIS survey showing the lot abuts the private lane. D. A maintenance agreement among neighbors outlining upkeep responsibilities for the lane. The correct answer is A. The correct evidence is a recorded easement document that grants a legal right of ingress and for example res. A survey alone does not confer legal access. Affidavits are insufficient to create a property right, and a maintenance agreement addresses upkeep but not the right to use. Reason B is not correct. An affidavit does not create or record a property interest and thus cannot satisfy the endorsement requirement. Reason C is not correct. A survey shows physical adjacency but does not establish a legal right to use the lane. Reason D is not correct. A maintenance agreement covers upkeep but does not grant legal ingress and for example res rights. Question 8. A developer holds 3 adjacent parcels conveyed by separate deeds and requests a contiguity endorsement to ensure them as a single tract. Under Colorado rules for contiguity endorsements covering multiple parcels, what documentation is required? A. Individual legal descriptions for each parcel plus a certified ALT. A survey depicting their shared boundaries. B. Proof of common ownership of all parcels in a single name. C. A consolidated deed that merges the parcels into one legal description. D. Affidavits from neighboring landowners confirming that the parcels touch. The correct answer is A. Contiguity endorsements require both proof of common ownership and clear depiction of contiguous boundaries on a certified survey or map. Ownership proof alone or affidavits are insufficient, and merging deeds does not replace the need for an accurate boundary depiction. Reason B is not correct. Common ownership is necessary but not sufficient without mapped boundary evidence. Reason C is not correct. Merging deeds does not provide a boundary survey, which is required for contiguity endorsements. Reason D is not correct. Affidavits do not constitute official boundary documentation and are unacceptable. Question 9. In coordinating closing deliverables, a title agent is responsible for which of the following tasks? A. Determining risk elements and establishing underwriting guidelines for issuance. B. Conducting physical property inspections to verify condition prior to closing. C. Ensuring all line payoff statements are obtained and delivered to settlement agents. D. Negotiating key contract provisions between the buyer and seller parties. The correct answer is C. The correct answer is ensuring all lien payoff statements are obtained and delivered to settlement agents, because the title agent must coordinate clearing encumbrances prior to closing. Reason A is not correct. Underwriting guidelines determination is performed by the title insurer's underwriter rather than the title agent. Reason B is not correct. Physical property inspections are typically performed by licensed home inspectors, not title agents. Reason D is not correct. Contract term negotiation is the responsibility of the buyer, seller, and their respective agents, not the title agent. Question 10. Under its fiduciary duty, an escrow holder must do which of the following? A. Disperse escrowed funds based on verbal instructions from one party. B. Release escrow funds upon receipt of conflicting written demands. C. Comply strictly with the written escrow instructions agreed by all parties. D. Invest escrowed funds in securities of issuer's choosing. The correct answer is C. The correct answer is complying strictly with the written escrow instructions agreed by all parties because escrow holders are fiduciaries, obligated to follow explicit written directions. Reason A is not correct. Verbal instructions lack the required written form and do not satisfy the escrow holder's fiduciary obligation. Reason B is not correct. Releasing funds upon conflicting demands contradicts the duty to follow clear, written escrow instructions agreed by all parties. Reason D is not correct. Providing investment recommendations goes beyond the escrow holder's role and is not part of the fiduciary duty under escrow instructions. Question 11. A settlement agent prepares a buyer's statement showing the following: receipts loan amount $200,000, earnest money deposit $30,000, seller credit $5,000, disbursements purchase price $230,000, title insurance premium $1,500, recording fees $600, prepaid interest $300, escrow reserve $2,000, loan origination fee $1,000. What cash must the purchaser bring to closing to balance the statement? A. $200, B. $400, C. $600, D. $800. The correct answer is B. The total receipts equal $235,000 and total disbursements equal $235,400, so the purchaser must bring $400 to balance the statement. Reason A is not correct. This calculation omits the seller credit and earnest deposit when determining total receipts, resulting in a lower net due. Reason C is not correct. This amount assumes the correct receipts but fails to include the prepaid interest fee, inflating the difference. Reason D is not correct. This answer double counts the loan origination fee, overstating the purchaser's cash requirement. Question 12. Under a standard American Land Title Association, ALTA owner's title insurance policy, which estate or interest in real property is insured? A. Leasehold estate for the term, specified in a ground lease. B. Life estate held by a designated life tenant. C. Remainder interest following the expiration of a prior estate. D. Fee simple estate subject to recorded exceptions. The correct answer is D. The correct answer is the fee simple estate subject to recorded exceptions because an owner's policy ensures the full ownership interest against title defects existing prior to policy date, excluding those recorded exceptions. Reason A is not correct. A ground lease interest is a leasehold and is not the fee simple estate insured by an owner's policy. Reason B is not correct. A life estate is a lesser estate interest rather than the fee simple estate covered. Reason C is not correct. A remainder interest is a future interest and not the present ownership estate insured. Question 13. Which of the following is a covered risk under a standard ALTA owner's title insurance policy? A. Forgery appearing in the recorded chain of title. B. Unrecorded easement acquired by prescription. C. Noncompliance with land use zoning ordinances. D. Encroachment of a neighboring structure onto the insured parcel. The correct answer is A. The correct answer is forgery in the recorded chain of title, because standard owners' policies insure against defects arising from forged documents recorded in the chain. Reason B is not correct. Prescriptive easements arise by use and are excluded unless specifically added by endorsement. Reason C is not correct. Zoning compliance is a land use matter excluded from coverage. Reason D is not correct. Encroachments by neighboring improvements are excluded except with a specific survey-related endorsement. Question 14. A buyer agrees to purchase a home for $850,000, obtaining a $680,000 mortgage, and paying $20,000 in closing costs out of pocket. The buyer wants an owner's title insurance policy that fully protects equity up to the full sale price. Which policy amount should the title agent recommend? A. $850,000. B. $680,000. C. $900,000. D. $1,020,000. The correct answer is A. The correct answer is coverage equal to the purchase price, $850,000, because an owner's title insurance policy protects the insured's equity interest up to the actual amount paid. Mortgage amounts or premium-based percentage endorsements do not set owner coverage limits. Reason B is not correct. Selecting the loan amount ensures only the lender's interest and does not protect the owner's full equity paid in the purchase. Reason C is not correct. Insuring $900,000 overstates the purchase price and incorrectly includes unrelated costs for owner coverage. Reason D is not correct. The 120% figure applies only to certain lender endorsements, not to standard owner's policy coverage. Question 15. Under a standard lender's loan title insurance policy, which of the following best describes the mortgagee's interest that is insured? A. The lender's security interest in the insured land, including the principal amount, accrued interest, and any advances up to the policy limit. B. The lender's security interest in the insured land, limited to the principal balance secured by the mortgage as of the policy date. C. The borrower's equity interest in the insured land, recoverable by the lender upon foreclosure. D. The lender's right to insurance proceeds for losses to the insured land, irrespective of debt secured. The correct answer is A. The correct answer is that a lender's title insurance policy covers the secured debt interest in the land, specifically the principal, accrued interest, and advances up to the policy amount. Other descriptions either omit interest and advances or confuse the lender's security interest with borrower equity or general insurance proceeds. Reason B is not correct. This option is incomplete because it omits accrued interest and future advances that fall within the policy amount. Reason C is not correct. This describes the borrower's equity interest, not the lender's security interest protected by the loan policy. Reason D is not correct. This misstates coverage by suggesting general insurance proceeds are protected rather than the lender's secured debt interest. Question 16. Which of the following risks to priority is covered under a lender's title insurance policy, insuring an insured deed of trust lien? A. An unrecorded easement established before the policy date, but first appearing in the records afterward. B. A mechanic's lien recorded after the policy date based on work that commenced before the policy date. C. A deed of trust in favor of another lender recorded after the policy date. D. A federal tax lien arising from liability incurred before the policy date, but filed after that date. The correct answer is B. The correct answer is that a lender's policy protects the insured lien's priority against mechanic's liens recorded after the policy date when work began beforehand. The other items either predate the policy and are accepted, or involve separate liens or governmental liens that are excluded by standard exceptions. Reason A is not correct. An easement created before the policy date is an existing matter, excluded from coverage even if first recorded afterward. Reason C is not correct. A competing deed of trust recorded after the policy date is a new encumbrance on the land, not a defect in the insured lien's priority. Reason D is not correct. Governmental tax liens are accepted matters and are not covered even if filed after the policy date. Question 17. A lender obtains a lender's title insurance policy on a loan with an initial principal balance that includes financed discount points. The loan documents show a principal of $250,000 plus 2 discount points rolled into the loan at closing. If each point equals 1% of the principal, what is the maximum coverage available under the loan policy? A. $250,000. B. $260,000. C. $245,000. D. $255,000. The correct answer is D. The correct answer is $255,000 because the loan policy covers the full initial principal balance, which includes the finance discount points. 2 points at 1% each on $250,000 equals $5,000, raising the coverage limit to $255,000. Reason A is not correct. This selection reflects the base loan amount, but fails to include the financed discount points in the initial principal balance. Reason B is not correct. This option doubles the point amount, adding 4% instead of the correct 2% to the loan balance. Reason C is not correct. This figure incorrectly subtracts the financed points rather than adding them to the initial principal balance. Question 18. Which of the following best describes the function of the insuring clause in a title insurance policy? A. Enumerates specific title defects and matters excluded from coverage under the policy. B. Defines the policy's effective date and any retroactive coverage period. C. Articulates the insurer's promise to indemnify or defend the insured against covered title losses. D. Specifies the insured's obligations regarding premium payments and claim reporting. The correct answer is C. The insuring clause establishes the insurer's core commitment to protect the insured against covered title defects by indemnifying or defending them as specified in the policy. Reason A is not correct. This refers to the exclusion schedule, which lists what is not covered, rather than stating the insurer's commitment. Reason B is not correct. This describes the insuring date or policy period clause, not the insuring clause's substantive promise. Reason D is not correct. This reflects conditions relating to insured responsibilities, not the insurer's promise to indemnify or defend. Question 19. A homeowner files a claim under a standard owner's title policy when the city enacts a zoning ordinance that prohibits any commercial activity on the property, causing its market value to drop significantly. Under the policy's exclusions for losses due to governmental police power actions, which loss would most likely be excluded? A. Loss in value caused by the municipal reclassification of land use. B. Loss resulting from an unrecorded restrictive covenant limiting property use. C. Loss due to a recorded mortgage lien not discovered before closing. D. Loss from a boundary line discrepancy identified after closing. The correct answer is A. The correct answer is the diminution in value caused by municipal reclassification, which falls under the policy's explicit exclusion for losses arising from governmental police power actions. Reason B is not correct. An unrecorded restrictive covenant loss is an exception to coverage rather than a police power exclusion. Reason C is not correct. A recorded but undiscovered mortgage line is a covered title defect, not a police power action. Reason D is not correct. A boundary line discrepancy is a covered risk under standard title policies, not excluded by police power. Question 20. An owner discovers a previously unrecorded mechanics lien against the property 4 months after closing, but waits an additional 6 months before notifying the title insurer. Which policy condition did the owner fail to satisfy? A. Duty to cooperate in defense of a title claim. B. Duty to pay all policy premiums when due. C. Duty to submit documents affecting title for review. D. Duty to promptly notify the insurer of a covered claim. The correct answer is D. The correct answer is the obligation to promptly notify the insurer of a covered claim. Delaying notice beyond the policy's specified timeframe breaches that condition. Reason A is not correct. The cooperation requirement applies after notice of claim, not to the timing of initial notification. Reason B is not correct. Premium payment obligations relate to coverage eligibility, not timing of claim reporting. Reason C is not correct. Submitting title-affecting documents is separate from the requirement to notify about a claim. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.